Good evening. Ira Epstein, and here we are with your financial market wrap-up. And this is for April Fool's Day, April 1st, 2024, and the time getting on about 6:50 p.m. Central Time. I hope you had a great Easter. I almost said Christmas there. Great Easter, Good Friday with it. I had the day off. You had the day off on Friday from trading. And now we're back into the markets. On Friday, the PCE expenditures came out. And if you looked at them as to what went on, they came in pretty much as per the estimates. Was that bullish or bearish? Well, at first, the bulls, as usual, try to grab control and take the market up, and they did. And then as you started thinking about it, and you said, it really didn't go anywhere. It just where the markets thought it was going to be, and the market sold off a bit. But what's really happening is the market's starting to shift its focus. It's going to look at 9 in the morning at a real important number. This is called the Job Openings and Labor Turnover Survey, JOLTS, JOLTS. That's going to give us an idea how many jobs are out there. Are people turning over? Are they staying with their jobs longer? What's going on? The day after, on Wednesday, I think we get ADP and Challenger Gray. On Thursday, you get unemployment claims. I want to check the ADP Challenger Gray, but it's either Wednesday or Thursday. And on Friday, this I know, you get the U.S. jobs report. Now, they're already looking on that for what? Well, they're hoping to see 205,000 new jobs, but they think the unemployment rate might fall back to 3.8%. It did, if you'll recall, move up last month to 3.9%. A bullish number, bullish in the sense that it would enamor the people that believe that the Fed should make rate cuts, would be a 4% number. A bearish number for the stock market would be a 3.7 number, taking you right back to the lows, recent lows that you've got in unemployment. And how do you fight that? Then you got to go back through this whole thing, and you almost throw the June probability at that point out the window. Or you increase the probability by, like what I said, go to a 4% unemployment, and you'll see, like tonight got a June probability of a rate cut at about 56.8% on the Fed Watch page for the CME groups. So you pay attention to all that. Got it? This whole week is about jobs. And that, believe it or not, in the financial arena, the dollar, the stock indices, and the currencies, very quietly, masked, is what you're actually trading right now. So put it together, work from there. When we take a look at the race, why did gold go up with the dollar so strong today, 50 points higher? And the reason is probably the market is looking, number one, at the Chinese, which have been majorly buyers of gold recently. And I think they've lost faith in their stock market as a people, and they certainly have no faith in the property market there. It's extremely weak. The March home sales were a disaster. I'm being kind in my words. And these numbers all came out on Sunday, so problems, all right? It's going to take a while to work through all those. Now, if, be it China, if the European Central Bank, if other banks want to join in and start dropping rates, what does that do eventually for the markets? When and if that takes place? Well, it's actually bullish, the commodity sector. Why? Because they're trying to reinflate. Now, when I say reinflate, it could be the economy picking back up. It could be the inflation picking back up. But the only reason you cut interest rates from a relatively high level is to spur the economy on, which in turn can spur on inflation and other numbers. Certainly numbers like this. Absolutely. I was too soon in the gasoline. All right. I don't think I'm wrong in my call, but I think I was too soon. It was that simple. Okay. There'll be another day where I come in now and get the timing better. Bonds and notes, well, you were down this morning. I came in and I was looking around a 4.21, around 4.23 in the 10-year note, finished 4.31. So the market is getting concerned about the Fed staying higher for longer. That's one way to look at it. When you look at the S&P, you're down what, 1/3% for the week? Big deal. When's the last time we had a 2% correction? That's what you're looking for. Can you get a 2? Let alone a normal correction of 10 to 13%. That's normal. We haven't had one of those. The last time you had a good correction was back here in the October-November timeframe, and you've rallied ever since. And by the way, when the first quarter's this strong, typically the year ends up on a strong pattern if you go back and look at history. When we look at what's going on in the S&P, the market is ratcheting higher, going sideways, ratcheting higher. We haven't had one of these periods in time where you ratchet, you take out a prior low, and you go for a low even under that one. That's what you look for if you're going to get the correction. Right now, the pattern is one of higher swing line lows and higher highs. Now, it's a funny low because the day right after, you had an outside day down. And if you take out that high, it often means you go to the closest moving average or a Bollinger Band. Well, the moving averages are all under the market, so it couldn't be one of those. They'll become support. So it had to be a Bollinger Band, and that's exactly what took place. The market made a run at that, and then today failed. As I said, when I did my morning subscriber video, 5 in the morning, I woke up and I'm looking at it. I get up at about 3:30 or so, and I go, what the heck? Why does everybody think the PCE was bullish? And I said, maybe I need another day off. Well, as it turns out, I didn't. The market finally understood what it was. You have a market that is refusing to embed. It's just staying overbought. The first major support where I would expect that the pros try to buy the market would be the 18-day average of close, this 52-53 level. Why? Because that's what's held the market on the previous breaks as the markets tried to break down to that. In the NASDAQ, you have a marketplace that is not overbought. That's number one. We know there's been a rotation from these fabulous tech stocks, and now we've seen a broadening out in other areas. You have a pattern here of higher lows, higher highs. If today's low, this is Monday's low, is taken out, probably going to continue to fight a battle at 18,400. If you take a look at the micro mini Dow Jones, you tell me where the market went today and where it's been failing against that upper Bollinger Band. So the support, the 18-day average. I think tomorrow you have to be patient, waiting on stock indices to see the JOLTS report. And as JOLTS go, at least we get an idea of, from job openings and turnover, what the rest of the week you can extrapolate it to a degree, and you take a guess. Is it weak or is it strong? Which way should we be looking? When we look at the Russell, we know that people have been running into the small caps because they're saying price earnings are right, the companies are right, the Fed's going to break interest rates. Well, maybe not. But you keep going to the Bollinger Band, and you tell me what you do each time you're hitting that, all right? I think that I'm pretty much on the money there. Tell me that in the 10-year notes, you didn't just fall out of bed against the 18-day average. And you know, I call that number the line in the sand, because it is where markets, when they're under it, like to go and fight battles, just the way it did here. When they're over it, they'll fight a battle at it until they figure out the next direction. And that's often the case with that particular average. In the 5-year notes, it did the same thing. So the resistance point has been easy to guess. And now the support points are the lower Bollinger Bands, but they're already oversold and you got a JOLTS report. There could be short covering in front of that report. In the dollar index, it just keeps running to the upside. It's embedded. Good breaks in the market, I think, will continue to be bought until there's a reason not to buy the market. And because this is made up, and I thank the gentleman that wrote me, I kept saying it's made up of 40% the euro. I knew it was 40%. It's 59.6% of the euro. It's nearly 40% of the other currencies. I had it backwards. I knew the number. I was extrapolating it wrong. And I do appreciate the correction, by the way. So if you're going to be long that, it's the equivalent of being short the euro. That's the way you got to think about it. And look at how this market's fallen out of bed. Why? Because the market is fully expecting that the ECB is going to move ahead of the U.S. Fed. That's what the market is building in. And the first move Lower interest rates, people move out of the currency drops. They want that to happen. Their goods become less expensive. They're adding stimulus, blah, blah. Okay. In the British pound, the story's not a lot different. So everything against the dollar for the moment, with the exception of the peso, is basically been markets that are just sitting there and going, okay, the peso's been strong all year. Not just this year, it was even strong last year. When you come to Bitcoin, it's time to have moved away from the March. We're in the April. You can see the battlegrounds here. The trend is basically higher unless you come all the way back here under these numbers, which are way, way down from where you're at. Figure the $64,000 level. When we look at the energy markets, you can see how the battlegrounds turned into the 18-day average. And today, the market fell apart. It's at 431. And when you take, by the way, that I thought I had done this right. I did it wrong. So don't pay attention to May Brent. It should be June. I thought I changed it. It didn't save it the way I did. This one's still correct. The May WTI is correct. May went off the board in Brent. So being May against WTI, no. I'll get rid of both and fix it for you. Higher lows, higher highs. I know I had done it before this. It didn't save it for some reason. And are we going to embed, which would be bullish? Now, OPEC is meeting. So they're sending their technicians, economists, and they will figure out what they should be doing. No big decision, as I see it, will come at this meeting. The bigger decisions will come towards the June time frame as I'm looking at it, and they're getting what they want. I mean, you are near $87 in Brent crude. So they have gotten what they want. Now they're losing market share to the United States because we keep selling oil all over the world and breaking in the markets we normally don't break into, including India. You know, India was buying Russian oil left and right, but the sanctions hit where Russia doesn't have the ships. They can't send them on certain ships to India. Otherwise, India gets sanctioned. They're avoiding that. And now I've heard that there's payment issues from India to Russia. Why? I don't know. In the gasoline market, I did not think you were going to break this high and lose the embedded reading. It's that simple. I was wrong. Market fell back. I think I'm dead right long term. I think you'll be going higher than all this. But we're in you've had a correction. Now you got a consolidation taking place as I see it. And in that gas, you had the first move where you lost the embedded reading. Take a look at this. Very important. Here's the market on Thursday's close. Today, you lose that reading and you go right to the 18-day average. Now you can shoot higher than that. We'll have to see if you can make it to the upper Bollinger Band. But you've ended this decline wave. You've now gone into what I'll call a neutral wave in the market. And one of the waves that I want you to consider is taking a look at all the research that I do for you first thing in the morning. It's not free. This is not the area that you see it on your YouTube where you're watching this tonight. This is where the trade ideas come in at 5 in the morning for futures, 9 in the morning. I start recording the ETF spider and stock market. And that's where I'm going to talk about the JOLTS, what's coming in, where do you go with this, how do you go about it. I'll show daily charts, weekly charts, talk about trade formations, give you ideas as to what I'm seeing. And as I just said, I don't walk on water. Nobody does, all right? However, I think that my record speaks for itself and my calls make a lot of sense over time. I was really aggravated to lose in the gasoline. I don't mind telling you that. I thought that was going to be the winner on this leg that was going to just keep going, and it didn't. Okay. You never put your everything into one trade. And, you know, it took my emotion out of the market, and that's why I took off, as it turns out, Thursday. I just said, the heck with it. Let's just come take a fresh look, and now I'm refreshed. Go to iraepstein.com. Under the word research, you can get in right there. That's how you see this. You can move your cursor to the top here, and that'll help you as well. I'm Ira Epstein. You have yourself a great day, and I'll catch up with you all in the morning. Take care.